Tech stocks are in turmoil and AI stocks have significant challenges ahead. Trump's tariffs have sent shockwaves through the market. In this video, we're going to discuss how these tariffs may reshape the tech industry and AI sector in general. We're going to discuss why it may take a little bit longer for the boom to happen, and also why it may happen and recover sooner than we think this year in 2025 and maybe in the next couple of months. So if you have some stock trades or option trades on right now in tech-heavy AI stocks, don't worry. I'm going to show you exactly how I'm managing my positions going forward to profit when it does boom. So be sure and hit like and subscribe down below. Also, download the free options workshop that talks about the main benefits of trading options over buying stocks. All right, guys. So what are these tariffs and what just happened? We just had a huge sell-off last week. Trump said he would impose a 10% baseline tariff on all U.S. imports, along with higher duties on dozens of other countries, pushing U.S. tariffs to the highest in more than a century. Even before the tariffs were actually set in stone, we heard companies like Walmart and Delta, and they were already seeing a slowdown as the tariff talk just started. There was an 8.8% drop in Apple shares, and that was the biggest weight on the S&P. More than 90% of Apple's manufacturing is based in China. The iPhone maker could face $39 billion of tariff costs. Dell and HP could face increases of 10 to 25%, adding between $200 and $500 in cost per computer. That would squeeze margins at these companies and force them to raise prices and deal another blow to the PC computer demand that's already been choppy in recent years. Shares of Dell and HP were down 17% and 14%. What is Trump thinking? On Wednesday, Trump slapped steep duties on leading tech equipment suppliers, including 34% on China, 32% on Taiwan, and 25% on South Korea, while imposing a 10% baseline tariff on all imports to the U.S. I thought Taiwan and South Korea were our allies. Electronics, which includes smartphones, PCs, and data center equipment, were the second biggest imports last year at nearly $486 billion, and data processing machine imports at about $200 billion were imported in 2024. Now, guys, there's a lot of details that have not been specified and still are up for negotiation. The key is really how the hardware is classified. The Trump administration could exempt semiconductors, but not the circuit board assemblies that they are sold with, which would mean that they would also be affected by the Taiwan tariffs. But if the hardware assemblies are also exempt, cost might not increase that much. These increased costs could delay data center expansion and AI adoption, setting back the ambitious plans such as Stargate, the $500 billion data center venture between ChatGPT maker OpenAI, SoftBank Group, and Oracle. Trump announced Stargate earlier this year with the goal to outpace rival nations in AI development. It would take into account the construction of 20 data centers in the U.S. The tariffs also pose a new threat to the top AI cloud providers, Microsoft, Alphabet, and Amazon, already facing skepticism from investors over the steep AI spending that they are doing now. All right, guys, now let's talk about what could happen, what's likely to happen, and why I think the recovery is going to be sooner than you think. Trump's administration has gone all in on AI. A day after his inauguration, the newly elected president stood in the White House with OpenAI CEO Sam Altman, the SoftBank CEO, and Larry Ellison, announcing a massive $500 billion investment in AI infrastructure called Project Stargate. Weeks before, Sun had joined Trump at Mar-a-Lago to tout a $100 billion investment in U.S. AI. And during a global AI summit in Paris in February, Vice President Vance spoke about the U.S. leadership in AI, insisting the administration plans to keep it that way. So whether you like him or not, do you think with his ego that he's going to let that fail? So I think AI is going to recover. However, let's take a look at the reasons why it may happen quickly and why it may take a couple of months or a few months longer. All right, let's take a look at why it could recover quicker. Resilience of the tech fundamentals. Despite short-term shocks, tech companies often recover quickly due to strong fundamentals and innovation. Investors that are disciplined look at this as buying opportunities as market corrections happen often. Negotiations and policy adjustments. Trump has historically shown a willingness to negotiate trade deals after tariff escalations. This is likely to happen again. And AI leadership goals. Trump has emphasized the importance of the U.S. leadership in AI development. I think the whole purpose of this is just to negotiate. Remember, he wrote The Art of the Deal. And by starting these negotiations, maybe the U.S. isn't going to get ripped off like it has been apparently for the last several years. So my thinking is he's not going to let stagflation happen, and the U.S. is still poised to be the leader in AI. But hey, let me know in the comments below your thoughts. So if you own stocks, don't worry. It's going to happen either quickly or a few months down the road. So just hang on. I wouldn't panic and sell. Again, I don't think you want all your investments in AI and tech. And I just have a portion in AI and tech, but I think it's the strongest growth sector going forward. I think the majority should be in the S&P 500 and bonds or whatever safe investment for your long-term goals. However, for your trading portfolio, if it's been hit like my tech AI trading portfolio has, I'm going to show you what I'm doing with a couple of trades and why I'm not too panicked moving forward. Okay, guys, here's my stock trading portfolio, which has a lot of tech, and you can see it's been hammered. But hey, let's take a look at a couple of trades. So Amazon, I've got the 195, 185 put credit spread on, and it's trading at 171. So it's way deep in the money right now. You can see right here. Here's the stock price. Here's the profit zone. I need to get it back up to 190, which is a 20-point move, which is not that big a deal. If there's any good news, look at the move down. And my target is 250. We're at 171. I'm not worried about it long term. Look at the RSI way down. Means it's way oversold right now. These guys are going to be the leader or one of the leaders in AI tech going forward. Everybody buys off Amazon, right? So we're at 41 days to expiration. So right now, what am I going to do? Nothing. I'm just sitting, waiting for the next month, until we get to the 20-day mark. So we're at 41 days right now. If I were to close this out and panic right now, let's see what it would cost me. It's $10 wide spread. I probably collected $300, a third the width of the strike, but we could close it for $6.37. One option contract controls 100 shares of stock, so that's $637 loss. I hit review and send and place the trade. But am I going to do that? No. I'm going to sit right now. And what I can do though, at 20 days, if it doesn't come back in 3 weeks, which I'm sure it may likely, all the bad news is baked in. It's, I think, the worst it's going to get right now. But at 20 days, what I'll do is I'll roll out to the next month. So right now, if I right click on this is the Tasty Trade option trading platform. There's a link down below, benefits if you go through the link. We can roll right here, and we can roll out to the next month, which would be June. And I'm not going to do it right now because there's still 41 days. But look at this. The cost would be $42. So $42. I could roll out another month right now and for only $42 hit and then just wait. So review and send, place the trade. But rather than do that, what I typically do, I kind of have these rules, and same as rolling out and moving down, but I would close out the position for 637, like we talked about, close 637 at 20 days, again, 15 to 20 days. And then I would open up another position in Amazon in the next month. If we did that in June, and I would go at the money. So rather than stay where we are at the 195, 185, I would move down and go to June, and I would go at the money. So I would go the 170, 160. And look, I can collect $4.08, so $400. So if that's 637 to close, I take away 4. It's really only costing me a little over $2 or $200 loss. And I'm positioned to take that move up going forward. So that's a put credit spread and how to roll going forward. Now, the other one I want to talk about is I utilize leaps when they're way down. AMD is, I think, going to be huge. They're a competitor of Nvidia, and they've got less expensive, great technology. I know they're doing very well. And look, $85 price, huge Ivy rank. My target for AMD is over double where it is now, $200 target. And it's been way down, way oversold. So I'm long. I've got leaps options on, and you can see they're 195 days out and 286 days out. So I'm not really affected too much right now. I can sit and wait for these to move up, just like the stock price. And I've sold a call. I've got one call on, a short call, 41 days to expiration at 110, which I collected. I've already made 273 on that. So we're making money in both directions. And there's 119 left in this 110 with 41 days left to go. Now, I had another call against the other leaps option, which I closed last week on the big down move. So I kept one on and I closed one. So I've already made money on the down move. But what I'll do, I may close this because it's above 50%. I may close it probably Monday. So I'll right click, close that position for $1.19 is the mid price. I'm going to put it under the market so that I know to close that. But I think there's going to be some good news next week. I'll put good till canceled to remind me, and I will go ahead and close that. And then I know that I'm looking to close that next week should there be a further down move. But these two options, what I can do once this gets to, we're at 286, so we're way out right here. But the October is 195. I don't really worry about it until it gets down to 90 days. At 90 days to 120 days, any big up move, I'll close that out. And then I will reopen on a down day another leaps option, and I'll go out a year, and then I'll write a covered call against it. So that's what I'm doing in stocks like AMD, where I have leaps on, and poor man's covered calls, and Amazon, where I've got put credit spreads. All right, guys, let me know in the comments below what you're doing with your AI tech stocks. Leave a comment, ask a question, I answer every one. Also, remember to hit like and subscribe. Download the free options workshop in the link below. And thanks for watching. I'll see you in the next one.